Good morning, everybody. I thought that this was an appropriate screen to start with this morning. The other one that said, "How did so many um, get it so wrong?" And we look at the charts, and they do display that, of course, like what's happening today and what happened, um, over the last 3 days, where you know things were stabilizing and such. But oh, that's not the wrong screen. Hold on a second. That's not the one I wanted. I don't think. Uh, Hold on. Let's see if it turns for me. Darn, this thing should be. Oh, too many things here. Hold on. There we go. That's the one that I wanted. Right? You know, pictures of others' beliefs and expectations created with money. That's what we do. Technical analysis as price pattern traders. And so we had conflicting information over the last several days. And I'll explain as we look at it and we see what's happening now. And there was a news event coming, right? And we all knew that there was this news event coming. And having open positions, depending on what would happen, it's either going to be great or it's going to be a stick in the eye. And so a lot of people with a stick in the eye this morning, that were long or some kind of, bullish patterns. But so let's take a look at what's going on here. But before we do that, as technical traders, and go back and look at the past, and so, excuse me, and compare it to now, see if there's some rhyme, so to speak. And so we go back here, and there was this huge down gap. This was August of 24, big down gap. And the markets, gapped down and they went down about 1,300 points at that time. And I can't move that. But anyway, you can see eventually they were down about 3.5% before they made a turn, and they were coming down to support. Right now, the diamonds are down about 4.5, not four, 2.5%. IWM is down a little over 4%, and spiders are down about 3%. Qs are down about 3.5%. These are significant moves as far as a gap. So you can see, just because we find one somewhat similarity, there's a big gap down, doesn't mean it means the same, right? Just like we cover in every MT Live, where the other concepts or pieces of our technical analysis. So when there was this big move down, it was into a monstrous support area here. And so it stopped pretty much at the first one. Maybe it could have went down to the second, give or take. It got somewhat close. You can see the cursor on the daily time frame. But the major difference was it was going down into this event, whatever the event was, I don't recall, when it gapped down and it kept going lower. So we're looking, we try to find some similarities as to, okay, can we get some kind of turn, or will it continue lower? So at that time, the next day was a assimilation day, stabilization day, and then it was a gap and crap day, and then it started a reversal. And maybe that's in the cards, or maybe it's going to be a waterfall decline. So as we look at charts, from those times, that's just the Dow. If we look at SPX, which I scroll back to that time, And you see it was moving down several days, and it started lower here in July, and then it was moving lower. And so on a percentage gap, and that made a turn 3%. And that's kind of what's happening now, give or take, right? Right now, the spiders are down just over 3%. Eventually, from there, it went down before it made a low, another 1%, give or take. And it didn't make it to support, all the way down to support. Different markets will do different things. When we look here, and this wasn't at support, it actually made a higher low, but it was a big gap down. So main point being, this was going down for a while, and then it was the third day down, and it was a monster gap to the downside. So now we go and look what's happening now. And we don't have that picture. We have more of a shock, like, oh crap, what the F were we thinking? And so what was occurring previous, to this morning, was prices came down to support, right? We had this initial move down. If you remember, our internals got to a mild extreme, and then we had the first close above a high of a bar and this little rally. Then there was news here, down it went, Trump saying whatever, and this gap down, and people buying the dip, the gap down yesterday, bought the dip, everything's looking so bullish, and so on. That's why it was like, how did so many get it so wrong? And not to say that, I or whoever got it right, because we follow the charts as to what they're communicating to us. And we don't fight with that. And then one of the things that I said and was in the chart of the week was, on these short-term basis, do you trade this knowing that the trend is down? And you can. It's not wrong. It's a choice. And so, initially, yesterday when the president started to talk, there was a little blip up, and then it was like whatever he was saying, you know, I don't know at the moment what he said, that the breakout failed and it started to waterfall to the downside. And so now it's gapping down, significantly. You can see here, gapping down below that support. And yesterday's slide said it better not fail or break. And here it is, it's breaking. All right, so go do the factory work and look to the left. And so we see the spiders are coming down to that 540 area. It's not marked as a pivot because it doesn't have 3 to the left or right, but it is going to be a pivot on the daily time frame because it was this significant move to the downside. So 540 on the spiders should be where, right, theoretically, continues lower like it did back in August 5th of 24. It continued lower, and it started to make a turn from there. So coming down there would be our focal area to see whether at that point things begin to stabilize and start to make a turn. And we'll look at the NYSE tick. We'll look at, ideally, what we want to see is option traders loading up. They want to be buying puts, right? Maybe you get a spike to 1.3 or 1.5. Those are the kind of things historically where, markets set lows. And we haven't seen that in many years. Maybe we'll see it today. We'll see. But there's a support area down there. And early in the week, we talked about this being a continuation pattern. Now, you have current patterns and you have new bars. That's why we have bar by bar analysis. And this weekly bar is not going to look like this at the end of the week. It's going, I don't know where the prices are going to close by tomorrow, but this green bar, let's assume it's going to go down here. It's going to look like a humongous topping tail bar. and the continuation pattern having followed through. Typically, continuation patterns do not retrace this deep into the initial move down. So things are out of whack here. Right? New president, old president, country was totally effed up, with the open borders and all the stuff that was going on. And now, we all have our opinions, but listening to what he was saying yesterday, to me, all sounds right. Sounds like a good thing. I mean, in the long term, we're going to see if it is. But this morning, markets don't like change, and they're just greedy MFs. Let me tell you something. That's my observation as far as the markets go. Markets, we're all here to make money. Markets, in generality, are evil. They'll step over your gasping baby for $1. And so here's this change, and they got it wrong. And so here's this monster gap down. So we deal with it, look to the left, do the factory work. Right? So the comparison of August 5th, 24, and that big gap down, and maybe that rhyme follows through lower, the percentage gap lower, and we see some support. Maybe the same thing will, happen, but it'll take a few days for this to dissipate. Qs are gapping down. You see the cursor on the weekly time frame down there on that support. So while the measured move would suggest lower, this support point suggests here's an initial stall point. Big gap down. Let's see that it gets down there. You can see my cursor. Well, it's actually down there. Maybe got to get a little bit lower. And just looking where that pivot is, 450. So set an alert at 450. Be aware of that. IWM. Gapping significantly below that support. And that was part of yesterday's slide. It better not break, because this pattern, being a picture of others' beliefs and expectations, if it didn't work out, it was going to be a major shock. And so now you see where it's gapping down to. And, I drew this last night. I was pointing this out in the video that I posted to subscribers in the Telegram there. This is going to be down. You can see the cursor. An official bear market in small caps. And we know how many money managers were touting small caps, for the last year or so. So they're throwing in the towel, they're puking it. And so that's this significant moves everywhere. And so now what was showing relative strength, we want to see what the transports are going to do. They're already down at their destination. So I want to see the transports hold up relatively well today. Hopefully they will. We'll see what happens. Interest rates, we looked at yesterday. They're gapping lower below this major support. And they got plenty of room to drop. So what's happening, and we've talked about this before, is the increasing belief that these tariffs are going to cause a recession. It certainly happens. Eventually, we'll see if the Fed is going to now come to the rescue. Interest rates going down. We know that they touted, or something. There was some news at some point about quantitative easing, buying bonds to lower interest rates. And that's what's happening and continuing to happen. And as money pours into bonds and interest rates go down, eventually interest rates become a positive where people are now willing to go borrow money. Money's cheaper, so on and so forth. And stock market becomes reasonably valued. And so we'll have to continue to keep an eye on this, as we will over the course of the weeks, and see what that does. And the dollar is getting killed as well. So See the euro, but it's spiking higher into these old highs. Right? So there are things like support that's to the left, euro coming up to the support area that could support some stabilization in the coming days. There's the British pound spiking up. It's not quite at that area up there. We'll see if it gets there. Um, you know, the yen, plenty of room to go up. So looks like the dollar is going to continue to decline. Interest rates are going to decline. And it's likely that the stock market is going to decline further. And we'll just see how this unfolds in the coming days as to the stabilization and what it's going to do, and bar by bar analysis and multiple time frames and all the things that we do to determine when the long opportunity is going to set up. And it will, because it always does. And one of the things that I've spoken about was these internals, right? Mildly extreme. And things don't always set up historically in the same way, of course, but this move down, that advancers minus decliners, I think they has to be at a minus 2000 to minus 2500, something really extreme. And so in the coming days, we want to see this down here at like minus 250, 300. Option traders, just this thing spiking down. This number probably around 1.3 or 4. So there's some guidelines for the coming days. Yeah, so SPX, it is so ridiculous. Remember yesterday I said, you know what? This gap down and the premium and the put options are not increasing dramatically. And so, okay, they're bullish, but why? And so now in 2020 hindsight, it's like, um, you know, they were complacent or so confident, and you just don't know. Sometimes it's just, okay, that's good. I mean, they bought, and so the pattern was there. So do you buy the dip at the appropriate time, Jose? And at the open is not going to be, as far as I can tell. Things are not bouncing here. So prices are down. Let me go back and look. SPY, where are they? They're down here. I'm looking to the left, almost to the pivot on the weekly time frame. Not even a pivot. That big red bar that was ignored. Right? That's where they are right now. You can see. All right. So now we look at SPX, that 540. So 540 on SPY doesn't always line up with SPX being 5,400. Go to SPX and look for the same area. And down here, give or take, it's close to 5,400. And so when I looked here this morning, this was the extreme strike. Right? So 100 strikes, more than that, below 5,400. This is terror, and exactly what we want. Yesterday wasn't what we wanted to see. Now, not that defines what happens, but when things gap down like this, you want to see these option traders driving the premium up in these puts. So I think anything in the area of 5,300 should be a no-brainer. I mean, unless the world's coming to an end here. I mean, that's just an insane move. And from where the close was yesterday down to here, right, to that strike is 7% in a day. I would say that's not happening. 5,400 in a day, 4.5%. Right. Now, this is down from that high day. And so, back down here around 12% or so. So we see where things are at. It's extreme. It could get more extreme, maybe into the first reversal period at 10 o'clock. But, those numbers should hold up. All right. All right. As far as opens go, I mean, this AVGO, which is, look decent. This is going to be an interesting situation as far as this credit spread, put spread, because this thing is down at 159 and the strike is 160, 155. It's obviously not good. But the volatility could crush it and it could be okay. If things bounce, we'll see what that premium is. So this expires tomorrow. Any kind of a move up with this, extreme, and then if it moves up, it should be fine. We'll put credit spread on car. These are the most dangerous or potentially dangerous things. 68. So this is going to be okay. That was so far away. That should be fine. We'll put credit spread on CF. 75. Well, it's going to take some heat. We'll see if they bounce, nice bottoming pattern. STZ. Let's see where that's at. We'll put credit spread because we had all these bottoming patterns. So I'll make those, we'll put credit spreads. 177. So I'm going to take some heat and, it's down there on some support. So we'll see how they hold up. And advisory letter. Well, some of these things are no doubt they're going to get stopped, but the patterns are what they are. Okay. So again, the 3 days of making the turn. This is down at $79. The stop, well, we're gonna have to wait at least 5 minutes or so because the stop was 79.68, which is still above, but it's opening near that bottoming tail bar, which is good. Right. So there's a lot of things that are opening near support. Um, yeah, so some of the big things like Amazon is getting shellacked pretty good. So looking at the fangs, so this where they're gapping to, down below support. Look at on the weekly chart where the pivot is. So in all of this nastiness that's happening, gapping near support, the things that are gapping and have room to fall, those are, and because of the bottoming action, that makes it worse if they have room to fall. But this is opening up near that support. Apple is getting it the worst because it was holding up the best. And so this is got room to fall and it's, gapping below there. So, the institutional favorites, getting hit here. Um, Dan texting me. Dan had to go back to his eye doctor, but he's going to be here shortly. This is gapping down near a pivot. So these are some things maybe, I'll be keeping an eye on them to see how they hold up or not. Meta, gapping down near the pivot. See the weekly chart. So look, things are looking, a little dire as far as the buy side goes, but it's at least that they have some support. Now, do they hold the support? That's going to be, the big question. Right? Uh, Tesla showing some relative strength. They've been buyers all over this thing. And you say, well, look at yesterday, the day, and I'm definitely going to be watching this intraday to see how it holds up or the lack thereof. Of course, NVIDIA, Nike's been a bit of a dog, Patrick, but I mean, this is gapping down to support. I guess everything's been kind of doggish, but wow, 55 and change. Oh, and that's been going down for a while. I'm look to the left in there. Uh, well, down there on that support. If you think Nike, I'd watch that in the coming days to see if it stabilizes, you know, kind of things. If they do, these big gap downs, theoretically, option premiums should explode. Oil is down here, but that's been going up. So, but that's another vote for recession. You know, interest rates going down, oil going down. We'll see if we see transports going down. So, look, the markets are hysterical. Let's call it that way, right? Because they got it wrong. These big money managers, they were buying it the last 3 days, right? With their analysts, they got it wrong, right? They were making these bets, and you know, reevaluate, see what happens. These tariffs are going into effect. They did, and we'll see what happens in the coming days. Yep. Right. So inflation, recession, stagflation. Anyway, it is what it is. Right. And let's see what the rest of this day brings. Right. I got to close this down so I can open it up. Stan will be here shortly. So let me switch to these charts. Give me a minute or so to close this and get it open on the other computer. How long do recessions last? Oh, I don't know. I'd have to look at the charts. Right. It doesn't, in a sense, those kind of things, they matter, but just look at the charts. The markets will bottom out and begin to go up long before you get the confirmation that a recession is over. Okay. And just, the government being the government. Remember going back, whether it was 2 years ago or 3 years ago, you had 2 quarters of negative GDP. And they said, oh, no, we're not going to pay attention to it this time. Right? And, oh, no, 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 it's not going to be a recession. Okay. So theoretically, the recession didn't come. And so whatever's going to happen, going to happen. And we're going to look at the charts and we will see, interest rates begin to turn around. We will see transports doing whatever, oil doing whatever, and we'll figure it out. Bottom line. So big nasty gap down. This is the ETF. It doesn't really match the transports exactly because there's more stocks in it than what the transports have. But Qs are gapping down on top of some support here. Give me a minute to get this opened up. I'm not looking at it, but you might want to look at like spiders and see, even SPY to see if there's premium down below for a put spread because the premiums should be jacked. it's open. I see the fangs are getting bought. There's significant gap down. So gap buyers. I can see the diamonds here that I got up. They're into the support area. So while it's a big gap down, it's really not, depending on where you look, of course, not that bad. Yeah, he had to go to a different doctor. He should be here shortly. He texted me a little while ago. They've got to let things settle down here. First 5-minute bar is done. Green bar. Microsoft still going down. That bar wasn't green. Meta wasn't green. It's breaking the low of the day. Tesla and Netflix got the biggest 5-minute bars. So as a counter trend trade, the R to R really isn't that good. I mean, it could gap fill, you have to manage it the way you want, but I'd let this second 5-minute bar complete itself. And then if you want to do a 1, 2, 3 on Tesla and Netflix looking for a gap fill. The Tesla is just a gap down and an inside bar. And it's just still the bottoming pattern is, in development. Yeah, those defensive stocks might, but I'm not going to chase something like that's been grinding up like a Coca-Cola. It's coming up to resistance. I mean, if you wanted to day trade it, maybe. I think as far as day trade goes, my preference is to find things that have been decimated. Bounce. I see Intel is above its open, but it may not be for long. It's just green for the moment, but it's got resistance there. So I'm just looking at some other things while we're talking, gapping. Semiconductors, SMHs are a bearish 180, turning back down. Now, you think like, should you short these? Maybe they keep going lower. Well, yeah, maybe they do, but I'm just generalities to short something that has gapped down, the percentage that it has on the surface historically doesn't sound like a very smart thing to do, but I think I'm just going to sit here for a little while and see what holds up and what doesn't. Whether now with the gap down, and I'm looking at SMHs, and that's actually like a continuation gap. That doesn't mean it won't retrace, where sellers will be more comfortable to sell, but will they get the opportunity to sell is the question. X. Yeah, so that's defensive. You can jump in there. Well, looking for, they should continue to buy that. Open a little Brazilian, a little terrace. Hit. FT, you're giving me brain damage with all that information. All that fundamental techno, whatever. I mean, so far, Tesla is doing good. I don't know as far as, if there's been bearish news on it. Yeah, Germany is up and Japan are up. So Tesla moving up there. Meta is not. Google, a 5 minute 1, 2, 3. Bear, bullish. So we got the second 5 minute bar. Um, so Qs probably don't make Qs, spiders, uh, long, stop below the low of the day. I'm glad it's red for the moment. Oh, Frenchie, safety isn't what necessarily what we're looking for. Safety is, more like institutions that need to move money out of something and put it somewhere else where, for that kind of reason. Doesn't mean we want to buy this. Nothing wrong with buying it, but, and putting a stop, you know, below the low here. Advancers minus decliners, which is at a minus 1890 right now, 1880. Still hanging at the lows. Put call ratio. Where are you? See these son of a guns. 0.92. They're not, they're not being terrified here. Anyway, those are the kind of, guidelines that to look for. Uh, Google heading to the low of the day, Meta on the low of the day, semiconductors on the low of the day. So unlikely Qs are going to move up. They're not. Spiders moving down. MAGs, ETF for the Magnificent Seven breaking the low of the day below the first 5 minute bars low. Yeah, that's a good one. That's good. Chemicals. I like that. That could be bought, Neil. That could be bought. And you want to wait maybe you get a pullback on that, but want to consider options for a put spread. You have to go out. They only have monthlies, so probably not. But you'd have to go out a couple of weeks. I looked at KO before. It's up near resistance. Let's just see if things settle down here. You know, maybe it's going to be 30 minutes. KR is doing well. SFM, we talked about 2 days ago, that gap down, it got bought right away. So those kind of food stores, right? People are still going to have to eat. Maybe they're going to have to eat rice and beans, but they're going to eat something. Walmart being bought on the gap down. So we'll see if that closes well. That could definitely be something if it was to close well to be a buy. Hmm. Volatility index is not up near the prior high yet. The one that made the low the last time. In the area, but maybe it has to get up there or exceed it. So, the VIX gapped up, which it should, of course. It's not that high yet. Could be, especially with the put call. Well, the put call ratio now is above 1.6, 1.16. I have an alert at 1.27, just to see if we're getting close to 1.3, which would give me, like a heads up as to, hey, option traders now are betting on, crash mode. Ticks are staying low. They're still above 1,000. They opened up below 1,000, which typically they do. S&Ps are holding above the low of the day. We'll see if buyers will defend it enough to bring it back up. And if they do, we'll still be thinking long above the high of the day. Partial gap fill, may not fill the gap completely. Yeah, well, Steve, all of those are defensive, healthcare, staples, utilities. JP Morgan gapped down. Bearish stuff, obviously. So, yesterday, in the room at the end of the day, we looked at certain things that were, doing well, and most things were. And JP Morgan had a nice chart. And you know, now it doesn't. So far it's holding the area of the 200, but that's a big gap. XLF is trading within the first 5-minute bars range so far. XLK broke the low of the day. Of course, MAGS did. Google's below the low of the day now. AVGO is above that 160 strike. So far, it's holding up well. See you, Robert. Bitcoin, we didn't look at that pre-market, but that was getting clobbered too. It's moving down toward the first 5-minute bars low. Semiconductors are on the open. SMH. Put call dropping now. things to calm down, settle down. AVGO could be along above the high of the day here. It's holding up. Um, Comparatively, you see a 5-minute chart. SPX, a little low today, 54. 72. Let's see. Let's check what they're doing. $5,500. That's already below that. Microsoft making a turn. Netflix going for the gap though. Um, yeah, you could short it, Steve Thomas. Again, sizable gaps here. Over 3.5 minutes to go in this 5-minute bar. So we're getting a green bar here on the retest. I'd like to see the Qs get back above the open. If they do, um, I'll buy T triple Q. No, that's SPX I'm looking at. Qs are still above the open. SPX is below the open. So you got to look, when you look at SPX and the opening price, it could be misleading. SPY is still above the open. Semiconductors coming off at a low here. I'm just thinking here short term, because of the size of the gap. Um, there'd be some type of retracement and stops will be a little bit below the low of the day. There's still 2.5 minutes to go in this bar. That's not done yet. EVGO took out the high of the day, backing off here. Meta trying to turn green. Well, it is green on the 5-minute bar. Still time to go in this 5-minute bar. Oil still moving lower. That had been moving up. Um, Interest rates, TBT, ready to break the low of the day. So that's not a good sign. It's right on the low of the day. See if it should turn up or not.
Hey, good morning. Just got back. Sorry for the delay. Uh, just taking a glance at the market. Diamonds and IWM the weakest here. Q's the strongest in terms of 5 15 minute bounce off the open. What are you all looking at? Look at this daily chart on the spiders. If it were to close right here, that is a pounding short tomorrow. Short to low, stop to high. Start off with that. So, Greg, Trump's Liberation Day, it's not off to a good start on Wall Street. Same with IWM here. It's ugly.
The speech sounds amazing to me.
The
You
what?
know, his speech sound great to me as far as the future. And
Uh-huh.
it's certainly, look, we have our opinions, but I think what he did was the right thing to do. And I was explaining the pre-market. It's just that, the markets being the markets, they don't like change.
Right.
They're greedy MFs, and this upsets the apple cart. And
Absolutely.
it's the new world, so to speak. And
Absolutely.
they'll figure it out.
Absolutely. Yeah, of course there's going to be pain when you disrupt status quo, corruption, etc.
Look,
All right,
we
look,
can
our
we can blame whatever Biden, Obama. They're all to blame. This shit's been going on forever. We know that. Bushes, all of them, both sides. And
agree.
those Republicans last night that wussed out on the vote, they should all burn.
Who was out on what?
There was like 4 or 5 Republicans that didn't vote for doing something last night. I caught the end of it. Anyway,
Mm.
you know,
Our Pelletier holding well. Look, what's up with Costco?
the
Look,
AVGO is holding above the strike, Dan. It's holding, that's doing pretty darn good.
look at Costco. What the heck got that thing? That has to be. And it happened after
Walmart, food stores, KR. Look at KR.
KR.
SFM. Yeah, look at KR.
Yeah.
And the SFM, that gap down and got bought.
Do you want
Walmart got bought.
you want you want to kill it right now, SFM?
No.
All right, well, I had to
Intelligent
stop.
halt mode.
I had to stop yesterday, 152.79. So that's so I'll just tell them there, I'll just tell them to keep that stop. Yeah, I'll go through all opens right now. Our Pelletier is holding, I see.
S&P breaking the low of the day here. The interest rates are, well, they're starting to come up. Little TBT's coming up off of the low. TNX are not moving.
Alex and I are going to start watching this trade, reporting this, but um, Alex with spiders and diamonds and IWM making new lows. It's too early for me. I mean, pretend this was Walmart. You would say that's a bullish gap. So not ready to short for me. Same with VIXI. Ideally, we want to get the flush. Spiders, I've been saying 540 is this weekly target right there. It's only $5 lower. Ideally, it goes $10 to $15 lower. to get it just the rubber band, and then I'll be looking at do that. Vixie, Walmart gap, well, a lot of things gap down and snapped here. And so it's not XRT. That looks like crap. All right, our TDS. All right, let's TDS 3624. Let's sell this right now. So we still have a very nice open game. I don't feel like giving up these gains with a stop days low. 38.67.